Hello, my name is Tim Gregory. I'm from Vermeer Investment Management and I'm here just to update you on our thoughts going into what is another very busy and important week for global stock markets. We start the week with the updated views from the Federal Reserve on interest rate policy, and it's widely expected that once again interest rates will be reduced by 25 basis points. And this is a conundrum situation because the President is pushing very hard for the Federal Reserve to cut rates more quickly. At the same time as the consumer economy continues to do okay, which slightly argues against the very aggressive policy that's being demanded. But the industrial economy is globally in recession and clearly slowing in the US, and interest rates won't fix that, in my view, because what is needed to fix that is a solution to the trade war. And there has been more optimistic noises about meetings in October that may help that, and that's clearly helped the stock market in the short run. But for there to be a fix for the global economy on industrial production and a resumption of growth in that area of the market, we certainly need to see a trade deal, and no moves in interest rates will help that in the short term. The President's position on interest rates is understandable, in my opinion, because what we see last week from the European Central Bank was a further cut in monetary policy, further cut in interest rates there, further negative rates, which in my view won't help their economy in any way, shape or form. It's clearly designed to keep the currency, the European currency, down, and this is a negative for the US economy, making European exports more competitive. So it's quite understandable why US policymakers can see the benefit of everybody else having lower interest rates and wanting them themselves. But despite that, the economy is doing reasonably well. And doesn't argue particularly for rates to be cut. So that is a particularly difficult position for the Federal Reserve to work their way around that. And I expect that they will take the central route, which is to cut by 25 basis points, which may prove pleasing to some people, but clearly not to everybody. At the same time as this is occurring, there's been quite an internal shift in the markets as a whole, with something of a swing back towards value investing, away from the momentum that has driven markets for such a long period of time. And it's going to be interesting to see over the coming weeks whether the move towards value is sustained or because of weak economic growth, we return back to a more defensive market and we see bond yields tail away again, having rallied quite strongly in the last couple of weeks when bond yields got down to around 120 for the 10-year Treasury and are now back over 180. So the next move there is going to be highly important to the momentum of the market. One area where value is perhaps more interesting globally than elsewhere is in Japan, where for many years the economy has been struggling with low growth, low inflation, and any attempts by the central bank there via monetary easing and QE have not really served to stimulate growth at all, but they have helped keep the yen lower. But Japanese companies, our balance sheets are awash with cash, return on equity is low but improving. There are a lot of cross holdings that could be sold between companies to increase value. We saw a big move this last few weeks between Sony and Olympus, where Sony sold their stake to Olympus, which Olympus then bought in, increasing value for shareholders and pleasing all active investors who've been involved. And we are seeing a significant increase in activist investor involvement in Japan. So after many years where Japanese equities corporately and culturally didn't benefit in a way that US equities have done from share buybacks and a very shareholder-friendly strategy, we are beginning to see a change in that culture. And I think this is very important and potentially, if this continues, a very significant opportunity for investors in an area of the world market that has been dearly unloved for a significant amount of time and could be about to change significantly. Thanks for your time.